I want to talk for a minute about how to raise money for your real estate deals. And that is really the starting point for a lot of people. It's the natural thought of when you want to get into real estate, I need to have money to buy houses. I have disproven that many, many times. The core of my business, the company I own, and I have affiliates in over 87 markets around the country, is really predicated on not needing cash or credit, no cash, no credit type deals. They're some of my favorites. But the reality is some of the best deals you're going to find are going to require capital. So no cash, no credit deals are great, and I love them, and I teach them often, but you always want to have a diverse bag of strategies, really a well-rounded way that you invest in real estate, so any deal that crosses your desk, you know how to handle. When it comes to raising capital for your deals, that's really, really critical to you finding the best deals and ultimately being able to make offers on those deals. So first, let me go ahead and define exactly what I'm talking about here. Raising capital for your real estate deals, primarily single family. They work on multifamilies as well, but this is kind of going to be fairly specific to the singles, dupes, 3 units, multis of 4, maybe up to 8. Typically you get higher than that. You can still use certain types of capital, but that does put it into a little bit of a different category. So the capital I'm talking about for your single family homes, or again limited multis, is what's really considered private capital, private lending. Private lending is really where an individual, somebody that's probably in your circle right now, will lend you money for the purchase and renovation of that property. I'm going to tell you exactly who to look for, what it means, what to say, and how to really structure it so it's very, very simple and very attractive for that person. But I need to tell you there are a few different types of capital that you could look for or could actually be and need to be aware of. So private lending or private investors, private capital is again kind of that individual person lending you money directly. Hard money, which is another form of kind of this private lending, but hard money, it usually comes from a hard money lender. They can be an individual person, but a person that actually lends money for a living. There are many companies that do hard money lending. The definition of hard money lending, or at least my definition, is where you're paying anywhere from 3 to 5 points and typically 15 to 18% interest. For those that don't know what points are a prepaid or front-loaded fee that you pay your lender. 1 point is equal to 1% of the value of the loan. If the loan is $160,000, 1 point is $1,600. If you have a 3 points, you're paying $4,800 right up front, and ultimately you're going to be paying anywhere from 15 to 18% interest. I'm sure there's people watching that say, oh man, hard money is 20%, 22, even higher. There are usury laws, but at the end of the day, you certainly can find pretty high, crazy high interest rates when you're dealing with hard money lenders. You have private money, which is really optimal. Usually there are no points involved when you're dealing with a private lender. Interest rates, it can vary anywhere from 7 on the low side to 12 to 15. You're still going to pay an attractive rate with private, but you don't have the points. Hard money, you have points and a very high interest rate. There's institutional money, like your typical loan from a bank. There are different types of institutional lenders. You have lenders that specialize in investment properties. Those are the types of lenders you want to look for if you're buying a property to either fix and flip or buy, rent, and hold, because those lenders understand that properties come with some things to do. You're making good buys. You're in the business of finding a good deal. Typically, you find a good deal because you have a motivated seller. The seller is usually motivated for one of 2 reasons. It can be more than that, but usually the house either is physically distressed or the property is financially distressed. The seller is behind on payments or owes too much. But those 2 scenarios present good opportunities. A property that needs some work, which is typically going to be where you find your best deals, you need a lender that understands that's the nature of the deal. It's the nature of the type of loan. You don't want to go to your local bank, qualify for an owner-occupied FHA loan if you're buying a property that needs a lot of work, because it's not going to pass muster. In fact, I had a deal recently where the buyer applied for the totally wrong loan, someone that we're working with, and they got shot down very quickly because those aren't the types of loans for these types of investment properties. So when you're looking for institutional money, there are secondary lenders. RCN Capital is one that we refer to many times. We refer people to them. They lend money to buy properties that are distressed, and they have certain loans exactly for that. So when it comes to raising capital for your business, it's good to kind of know different options and what the different types of capital are. Private lending, private investors, hard money investors, institutional lenders such as RCN Capital. You can also go to Bank of America or Chase or Wells Fargo. They do have loan products, but those really aren't the banks you want to go to for investment type properties. If you have a local credit union or a smaller bank that is somewhere you can have a relationship with, that's always a good place to start, and they can sometimes have loan products geared towards these investment properties, but they're definitely good institutional relationships you want to have for the long term, because if you're buying to rent and hold, you're typically going to use, or I'm going to encourage you to use, private money to buy it, private money to renovate it, and then ultimately you're going to end up refinancing it. So you're going to go pay off the private lender when you get an institutional or a traditional bank loan. Credit unions are really, really good source to start that relationship with. So I've given you kind of the gamut, or at least a couple of the different scenarios for how to find capital, the different types of capital, and ultimately what I think your best bet is, which is going to be private lending. That's going to be the easiest, quickest route for you to get money for your deals, but you also have some other options that are out there. So, and if you're going for the long-term buy, rent, holds, which I'm a huge proponent of, you want to have some of those institutional relationships that you're working with, that you're nurturing, letting you know what they need from you in order to qualify for these loans and ultimately to have these loans for a long period of time. I will tell you, kind of a quick sidebar, that most institutional lenders, once you get 10 properties, 12 properties, they usually are okay and at their maximum point. So one of the issues with BRRRR and that strategy, buy, rent, and hold, is that you have kind of a cap on how many you can do with your normal institutional lenders. There are ways to look outside of those, but that's another video for another day. We're talking about getting your first deal, getting money for a deal you have right now, not getting money once you've maxed out to 12 properties and your bank is no longer interested in lending you money. So when you've gotten to that point, that's a good problem to have. So, all right, in real estate, there is an old adage in investor world, investor speak, investor jargon that says, if you find a deal, you will find the money. In my life, that's proved to be very true. When I have found a deal, I've always been able to find the money, and it's kind of which comes first, the cart or the horse. I'm going to answer that in just a second here. The affiliates that I work with, I have a company, Little Pink Houses of America. You see my pink wall here. I always point it out in my videos. Not many people have a pink wall in their office, but our affiliates, we tell them the same thing. Bring a deal in, we will help you find the money, and that is very, very true, and it's happened many, many times. The difference is we're in the game. We're in the know. I have people that I've already identified from doing this for quite some time. So I have a roster of options for me to take properties to when I need to raise capital. If you brought me a deal on a Friday at 5 p.m. and needed to close it by Monday at noon, I'd have the money found over the weekend, but I know where to look. Most people don't have that same come from. They don't have a roster of potential options to visit when they have a deal that they find. So if you're out there looking and shaking the trees and you're trying to find good deals, you're going to find them. They're out there now. In fact, they're always out there. Good markets or bad markets. You just know it takes knowing where to look. There's deals out there now, and as the recession is forthcoming at the time of the filming of this video, might even be here, there's going to be even more opportunity. So the question then begs itself, what comes first, the cart or the horse? Do you go find a deal and then find the money? Or do you go find the money and then find a deal? Well, I've got to tell you, the old adage, find a good deal, the money will come, is kind of some BS at the end of the day. And if I'm you watching this and I've never done a deal, I'm not even in real estate, I don't know private lenders, or at least I don't think I do, I don't have a roster of options to take a deal to, it makes me nervous. Why would I go out and commit and spend time finding a deal when I should be maybe finding the money? First of all, don't ever pay cash of your own. Use O.P.M, other people's money, and we could argue that point. But getting started, it's important that you're not using your own out-of-pocket money. If you want to try to build up your cash and pay cash and go do it again, you're going to have a real long, slow, arduous path to building a rental portfolio. That's the benefit of using O.P.M or other people's money, whether it's a bank or private. It's either way you're borrowing and using other people's money to leverage that to purchase property. So at the end of the day, don't try and use cash. But ultimately, if you are out there shaking the trees and you're trying to find a good deal and you don't have any investment capital lined up, that can be kind of a scary proposal, kind of a precarious scenario. So Here's what I recommend. You really want to have parallel tracks. You should be shaking the trees looking for deals. This is not a video about where to find deals, where to start, what to say. This is a video about where to raise and how to raise the capital. And I'm going to give you a very simple formula here in just a minute that's going to help you hone in on exactly what you should be looking for while you're looking for properties. So let me say this. If you find a deal, you happen to live in a cul-de-sac, and on the other side of the cul-de-sac, which there's only 4 houses, Grandma dies, and Grandma had lived there for 60 years, probably haven't touched the property in 40 years, meaning it needs everything. Paint, carpet, it smells like Grandma. God love Grandma, but it smells like moths or mothballs, whatever those things were. Every time I walk in my grandma's house, it's all I smelled was mothballs. But Grandma always has a distinct smell. Grandma's house always has a distinct smell. I have a sneaky sense that some of you are connected with what I'm saying here when it comes to Grandma's smell. Having said all that, the property needs a ton of work. Well, Grandma, who lives on the other side of your cul-de-sac, her children, she's got 2 of them, and they're both on the other side of the world. They have no interest in this property. They have no interest in fixing this property. The property might have good memories, might have bad memories, but nonetheless, it's memories of Mom, who's now passed. They don't want to mess with it. They just are looking for somebody to come take this problem to them, opportunity for us, off of their hands. So they say, well, they happen to know that you are in real estate or that you're shaking the trees and you make the right approach, and you end up coming across a potentially really, really good deal that you can buy it for, say, 30 or 40 cents on the dollar because it needs so much work. Well, you now put it under contract, and that's one thing I always teach. Put the deal under contract. If cart or horse, if we're talking here, and a deal shows up, put the deal under contract. Don't wait for funding. So I want to be very clear about that. Here's exactly why. Finding the deal in many cases can be the hardest part of the equation. Sometimes harder than finding money. In fact, I would argue very much so finding the deal is the harder part. Finding the money should be the easier part, but if you're just getting started, both are hard, right? So you find this deal, you stumble on it, and it's Grandma's house across the street from the cul-de-sac or in the cul-de-sac. You put it under contract, 30 cents on the dollar. Now you've got to go find the money. And yes, you've got a sense of urgency here because the heirs want to close and they gave you a good deal. You need to find the money. One thing that's really important to know in a situation like that, you can always wholesale your contract or sell your contract to another investor. You don't have the money lined up, you are struggling to find the money, so you end up selling that contract for $10,000, $15,000, maybe more. It's what we call the short dollar because the long dollar is the investor you sell it to who comes in, puts the money on the table to buy it, and then really fixes it up and makes it beautiful again, and now they sell it for 100% of the value, and hopefully they make a lot of money. Typically, the long dollar makes a lot more than the wholesaler who makes the short dollar. But always remember, as a default option, a default scenario, if you find a really good deal and you can't get it funded, you can always assign your contract for a fee. It's another video. It's not something I talk about in this video at all, but it's definitely a very solid backup option. There's times where we have a bunch of contracts coming in. We either don't have them all funded or we're not sure we want to take them all down, or we may have a better one that's coming down the pipe. We've sold our contracts off and made 5, 10, 15 grand. It's not my favorite thing to do, but when you're dealing with a lot of good deals, there are other investors out there it might be a better fit for. Always wanting to make money, and there's different ways to do so in real estate. It starts in many cases with controlling that deal. So don't panic if you have a great deal and you don't have the money. Put it under contract. Try to find the money. Simultaneously, you can always assign your contract to another investor. It's really the definition of what wholesaling is, and you'll make a nice, healthy fee in doing so, especially if you carve out that really, really good deal. Having said all that, where do you find the best type of capital in the situation with Grandma's house or just when you're going out to look for properties as a whole? Here is my breakdown. Here's my best advice. And before I give it to you, I will tell you this. At my company here, Little Pink House of America, we have affiliates in about 87 markets around the country and in North America. Very proud of our team. We've got a great group of people out there always looking for new affiliates. If there's any synergy here, obviously feel free to check in with us and see if there's a potential fit for you and for us. Earlier this year, when the market was really, really shifting and we were really seeing it, we had what we called a cash buying convention. I brought our affiliates in from different parts of the country. I think we had affiliates from 26 or 27 states here. All that came for a 3-day training on how to find capital for your deals, the essence of this video, how to find these distressed properties, how to structure your offers, different formulas. It was for the people that have paid me a lot of money. It's part of my inner circle. We filmed it, and we actually have that. You can go to my website right now. I think we have it at $297 or $397. In this video here, we will have a description in the link. It's $47. I want you to have it. If you think I'm making a lot of money on $47, you're wrong. It's something that I think you should have because I'm proud of it. It's great information. I have a mentor of mine who's raised over $100 million in private loans that had a whole morning session on what bankers look for and how he's done so well with raising private money. It's just tremendously valuable. So this is only offered, this $47 in this course. If you take me up on it, I hope you do. I hope you get a lot of value from it, and it's yours for $47. So just want to share that. I go in a lot more detail, obviously, even provide the documents and scripts for what to say to your private lenders. Again, $47 is my gift to you, and I hope you can get some value. But here's what I share. I share in much greater detail in that 3-day, what we call CBC training. But here's really the essence of what I want to tell you when it comes to private lenders and finding private capital. There's really two primary ways that I teach people. First and foremost, the easiest way, if you need to find money today, let's go back to grandma's house. You right across from the cul-de-sac, the heirs don't want it. They just want to get rid of it. It's really a nuisance or a liability to them. It's an asset to you as an investor or an aspiring investor. You could, and I've advised people this, and we've had the same results that you should expect, you could take that deal. You don't want to give the address. You don't want to necessarily give all of the meat and potatoes. You go into a local real estate investor Facebook group. Every city has multiple ones. So go to your Facebook account or your Facebook app. You look for local real estate investor groups around your area, and you plug into those. And there's always chat going on back and forth. You put in there that you found a great deal. You don't have funding for it. You're looking for a partner to fund the deal. And here's the easiest part. You're willing to go 50-50. And you're going to have other people, oh, don't do that, structured at 7% and da-da-da, and amortize it over 5 years, and maybe that doesn't even make sense what I'm saying. And there's always other pieces of advice you could follow and take, and certainly there's an argument for you to not do this because you might be able to find a better deal if you can find a private lender in your circle. But guess what? You've got a great deal in front of you. You need money to do the deal. If you go into a Facebook group and you put it in there that you're willing to split the deal 50-50, you buy the house, you found the deal, you're going to work the deal, you just need an investor to put the money up, not just the purchase, but the rehab, and you'll split it 50-50. You have an agreement that says as much. Logistically, whether you take title, the investor takes title, you form an LLC together, and that LLC takes title, which probably makes the most sense. That's kind of logistical, but the essence is you can find investment capital on Facebook groups in your local markets. In fact, we had an affiliate here just a few weeks ago, came in, ran across a smoker deal, didn't have the capital lined up. I said, here's what I want you to do as you're looking for the capital over here. I want you to go on Facebook and put it into some of these local investor groups that you've got this deal, and you're willing to split the profit 50-50 within 2 hours. 2 hours of posting that on his Facebook, one of the local real estate investor Facebook chatterboxes there. That's what they call them, chatterboxes. I know better. But ultimately, he found the money within 2 hours. And so there's very much a resource of people, resource of investors and investment capital on Facebook, in Facebook groups that are real estate investor groups locally where you live. Frankly, they don't necessarily even have to be locally, but locally typically would be the best starting point. But here's what I want you to do. There are people in your life right now that could be very good candidates for private lending, for lending you money to buy investment properties. Now, this is kind of a fix and flip scenario that I'm going to discuss here, but there's people in your life that have some money. Whether you know how much they have or not doesn't matter, but they may be at a time and place in their life that they'd be willing to lend to make a really good return. And so what's important, and I go in greater detail in that 3-day course, but you have to have the mentality that you're not asking for money or begging for money, or I always feel when someone does something nice for me that I want to say thank you and I view it as a favor. So you could say they're doing you a favor by lending the money, but guess what? You're really doing them a favor as well. You're not begging for money. You're simply saying, here's what I'm doing. Here's a property that I have. I'm looking for a partner. They put the money up. I do the work. We split it 50-50. Heck, you can even take the deed to the property, Mr. Investor, if you like, especially if it's somebody that you're talking to that's in your inner circle or in your sphere of influence. So when you go to people, you have to have the right mindset. If you're fearful, if you think you're begging for money or asking for money and on my knees, please, 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 can I borrow money? It's the wrong mindset. You have an amazing opportunity for someone who's probably not making near the return that you're going to offer them in a CD, a savings account, any sort of treasury. All those are very conservative, and the stock market, I mean, that's a flip of a coin depending. This is a great opportunity. So your mindset has to be right first and foremost. You're not begging for money. But here's what I want you to do. I want you to take a piece of paper, and I want you to write down 10 people, call them the top 10 of you think that are in your sphere of influence. It could be your chiropractor, could be your dentist, could be your mom, could be your grandma, could be your cousin, doesn't matter. Could be someone that you used to work with, could be your boss. It doesn't matter. People that are, in your opinion, well-heeled enough that they could have investment capital to buy the property. Once you put 10 on a list, I then want you to identify what we call, or what you should call, your top 3. Who are the top 3 most likely? Who are the best 3 candidates in your opinion? You know, you can't count other people's money, but you have a good feel for your relationship with that person, the synergy you have, their ability to fund a deal. You identify your top 3 people, and that's who you're going to start with. And you're going to make a little bit of a bigger list to a small list, a more bite-sized list. You're going to target 3 people. And the conversation is very simple. You know, mom, as you know, or grandma, as you know, I've been looking to get into real estate, or I've been doing some real estate deals. I've been looking for some deals. And ultimately, whether I have one or not, because you could have this conversation with a deal, or you could have the same conversation without having a deal yet. So if I run across a deal that looks like it could be a good moneymaker, I'm looking for an investor that would partner with me. I would do the work. The investor put the money up, and we'd split the profits 50-50. As far as logistics, we would probably just form a little company. We'll both take ownership of that LLC, and we'll both take title. Or you can take title. Again, those are really logistic. But any investor, by the way, I don't care if it's grandmother or a bank, they really want to know, how am I secured? What's my security, right? How do I know this has some collateral or something that gives me some measure of security? And number 2, how am I going to get paid back, and or how am I going to get screwed? Those aren't elephants in the room, guys. That's just the reality of what they're thinking. What's my security, and how am I going to get screwed, or how am I going to get paid back is what I hope. So come right through the front door and tell those things, right? They can take the title of the property, or you can have an entity that they own 50% of that takes title, and ultimately they're secured by that, and you're buying it at a deep discount, and ultimately are going to repay them with the proceeds of the sale. So you're answering those questions right away, and you don't have to go super deep. You don't have to have interest rates and amortization charts and breakdown of the payments, and because if you're doing a 50-50 deal, they put the money up, you do the work, you split the profits 50-50. Once you have that conversation, and again, your mindset cannot be one of begging, but once you have that conversation, now you have a feel or a flavor for where they are. And one of the simple questions you'd want to also know is, what kind of price range would you be comfortable? If I found a house for $100,000, would that work for you? What if I found one for $250,000? Would that work for you? And that's question 1. Question 2 is, if I found a deal and it required a pretty quick closing, is that possible for you to be able to fund the deal within a relatively short period of time, maybe 2 to 4 weeks? If someone has to pull it out of they have to sell stock or pull it out of some account, that may not be as expeditious as you would need it to do the deal. So those are very good kind of secondary questions once you've gotten through the initial conversation. So it's important to understand that you don't need some absolute firm, concrete, hardcore commitment. Yes, I will lend you $150,000 on this date and this year and this time. What you need is the soft, or that warm understanding of what you're doing, and I won't even call it a commitment, but that interest that says, you know what, this sounds really great. Yeah, I'd be interested if it was something, of around 100,000 or 200,000, whatever the number might be. Let me know. I have the ability to access it fairly quickly, and so now you've got what you need. I've also learned it's really important when you're an investor to have that kind of non-commitment, because you want to see the deal first. So if you're talking to an investor and you have grandma's deal in your hand, grandma in the cul-de-sac, then you could also go through the numbers and say, this is why I think this is a really good deal. We can pick it up for 80 grand. It needs, 25,000 in work. We'll be in it for 105, and I think the value is going to be 175, right? There's about 70 grand profit on the table. Very real numbers, by the way, even though I'm making them up. Those are very real numbers, a very real scenario. Now the investor mom, dad, grandma, grandpa, cousin, whoever says, wow, here's a house. I can see why you got a good deal. I found it from the heirs and I can see it needs work, so I can put money into it, create value, add equity or create equity to the property, and ultimately sell it, make a healthy profit. Yeah, now I'm interested. But if you don't have grandma's house in your hand, you just are looking for that soft commitment from that private investor because they want to see the deal. So they say, yes, 200 or under, I could access it pretty quickly. Say, great. I'll tell you what, I've got a couple lines in the water now. I'm constantly looking. When I have something that's worth sharing, I'll let you know. Kudos, man. You got to a certain point where you've got a soft commitment from an investor. I'd argue it's a hard commitment because the fact that they would say that tells you they're interested in making money. They like you, I'm assuming. They want to help you, I'm assuming. But they also want to feel safe and they also want to make money. And most people know there's a few better ways to make a lot of money quickly than doing real estate deals, which is the beauty of what we're talking about here. So, best advice, identify your top 10, pick your top 3 out of that, set up a time for you to have conversation. It's just a conversation about what you're doing. It's easy when you just say, hey, we'll split the profit 50-50. You don't have to worry about rates and all that good stuff. Hey, once you've done 5 deals, 3 deals, a couple deals, then you can go look for investors that are going to you're going to charge an interest rate to, are going to charge you an interest rate, and you keep the profits, you just pay an interest rate. But get a couple deals under your belt. It's easier to get private money when the private lender is going to participate in the profits, not just lend you the money and be a bank. Right? It's a lot sexier, a lot more appealing to them to know that, hey, I'm splitting 50% of this deal and I'm going to make 35 grand on this deal, and so is my son or so is my nephew, and whatever the case might be. That's a lot sexier than, oh, I'm going to make 15% interest only over the next 6 months and whatever the case might be. So give yourself a little bit of an easy button. Just go for a 50-50 split is my best advice. Get a couple deals under your belt, then you'll end up converting that to more of an interest rate. You then can refinance if you want to hold on to these properties with an institutional type lender that we talked about a few minutes ago. But as a whole, I just want to give this kind of general encompassment of how to find private lenders, the very soft approach that you could have with them, the reality that you've got people in your life right now. There's people in your circle today, right now, that you could approach, and with the right approach, the soft approach, and certainly with the right deal, they would put the money up for you to do the deal. It's a great way to get started in real estate, or to do your next deal, or to do your 10th deal. But when you have that access to private capital, you then can make offers on properties for cash, and that's when you can really find good deals. So again, more details in this course, $47. Again, that's not even going to cover costs here, but at the end of the day, it's something that I certainly want to make available to you. If you have any interest, click in the link. If not, I hope you had some value from the video, and certainly love to hear any comments you have. If you have questions, I try my best to answer all those directly. I'd be happy to do so. But get out there, guys. Find some money. Deals are coming, and they're not going to slow down anytime soon. I'm 26 years in. There's never been a slowdown of deals. Let me just tell you very clearly, there's always more deals coming down the conveyor belt. When you have access to cash, you can strike on them and make a lot of money, can change your life money by having access to private lenders.